AMD, Advanced Micro Devices, fourth quarter 2022 financial results are out. This was a highly anticipated earnings report, especially after Intel's absolute bomb it dropped on the semiconductor industry last week. I had a bit of anxiety headed into this one, but overall had my head up high because I did not think Intel's problems were also AMD's problems. And for the most part, AMD put a lot of our anxieties to rest here. Here it goes. Before continuing, let me remind you to hit the like button and subscribe to the channel if this video is helpful as you do your own investment research and increase your knowledge of business and technology. We really appreciate the support, as subscribing to the channel helps us continue putting out content like this. AMD making our lives super simple here with this nice infographic on their fourth quarter revenue results. Data center, that is the bread and butter these days. 1.7 billion in revenue, up 42% year over year. CEO Lisa Su and the top team explained that, as has been taking place for years now, the EPYC server processor for data centers for enterprise computing continues to gobble up market share, growing very fast and accounting for all of that growth. But the elephant in the room, client revenue, that is where laptops and PCs come in. That is the ugly part of the chip industry right now. Device manufacturers trying to burn off excess inventory. And so basically they're telling companies like AMD and Intel, hold up on the new chips. We don't need them right at the moment. This is one area that's interesting. Client revenue fell 51% in this segment. So, not a super important area for AMD anymore, or at least right at the moment in the midst of this slump. But I'm going to compare this to Intel's comparable segment here in just a moment. Gaming revenue, this is discrete GPUs for PCs and laptops, basically high-end video game computers, as well as AMD's console business. As you may know, AMD's chips power the Xbox and the PlayStation, as well as some handheld video game devices, still holding its own, down 7% year over year. And embedded revenue. This is primarily Xilinx, the stock that used to be XLNX that AMD acquired in February 2022. Most of this segment is Xilinx. Xilinx in the comparable period the year prior had revenue of $1.01 billion. If you're doing your own due diligence in this important area for AMD. So as I wrote last year, I think AMD's purchase of Xilinx is huge. We're going to be talking about the benefits of this for years to come. I thought they were getting a deal at the time they bought it. Xilinx growing over 30% in the last year to 1.4 billion in Q4. Fantastic. Profit margins, you can see, are under some pressure. Cash from operations, free cash flow down, all of that driven by client revenue and a little bit of softness in some areas of enterprise and data centers, but overall, really solid financials for AMD. Intel also provides a breakdown of its revenue segments. They don't have an infographic, so I threw this together really quick. And I did leave out Intel Foundry Services, which AMD does not have. AMD has no manufacturing. This is an Intel thing. So I left that out of the equation just for the sake of comparability here. But client computing for Intel, the company's far and away biggest moneymaker, fell 36% year over year to 6.6 billion. And now I'm going to pause here because I just showed you the infographic for AMD. Their client group fell 51%. Obviously, still very tiny compared to Intel here. This is maybe the one silver lining from Intel's earnings report, and maybe an area to keep a close eye on for AMD. It seems like in the latest generation of CPUs for PCs and laptops, Intel has made a little bit of headway. Its high-end chips, maybe it's too early to tell, but maybe they might pick back up some lost market share from the last couple of years from AMD. So keep a close eye on this. I will say this, though. So while AMD had a bigger 51% year over year decline in their client segment, it was interesting on the earnings call. CEO Lisa Su said they expect PC and laptop sell through to be about 260 million in 2023. That compares to Intel's outlook to be roughly 270 million. So a little bit of a disconnect here. And I wonder if maybe Intel, up through Q4 anyways, maybe was still not thinking the downturn would be that bad in PC and laptop. And maybe AMD took things a little bit more seriously and more aggressively, took action more aggressively with its manufacturing partners to offload inventory and sold fewer chips. Either way, something to keep an eye on here. Maybe too soon to tell what's going on. But again, not a huge segment for AMD anymore compared to Intel. Okay, so moving on, data center and AI, you can see negative 33% there for Intel versus the huge 42% growth for AMD. AMD still absolutely obliterating Intel on this front, taking away huge chunks of market share. Network and edge for Intel down 1% in the last quarter. Mobileye up 59%. There's not a comparable segment here for AMD, but let's maybe just call this AMD's embedded segment, the Xilinx acquisition, because Xilinx makes communications equipment, aerospace chips, automotive. That's kind of the Mobileye subsidiary for Intel. Again, not a perfect apples to apples comparison here, but you can see other than Mobileye, mixed results for Intel versus over 30% growth for Xilinx, AMD's new acquisition. And then accelerated computing and graphics. This segment is actually going to get hacked up going forward and lumped into client computing and data center and AI, probably where it belongs. That's roughly where AMD puts its gaming segment. But at any rate, you can see both of those comparable areas doing okay for Intel and for AMD as well. Overall, though, I think the big takeaway here, client computing, big segment still for Intel, not doing that great. Data center and AI also in retreat. That is an area AMD is excelling in and rapidly playing catch up on the market share front. This is an AMD video though. So let's talk about AMD's commentary on 2023, initial outlook for the year ahead. So much like Intel, and I didn't care much for this, AMD not providing a lot of specific guidance for the year ahead. But I suppose that is to be expected given a lot of uncertainty surrounding the economy overall, what happens in China with its reopening and the sudden surge in COVID-19 over there, as well as how specifically this sell-through of PC and laptop chips will play out. But overall, AMD echoing comments from other chip companies up to this point, probably a bit of a rough start to 2023 with some substantial declines in its client segment. Also, its gaming segment had a record year for especially consoles, the PlayStation 5, the new Xbox, still selling really well in the fourth quarter of last year. So that segment may decline as well through the first half of the year before PC and laptop sales rebounding the second half of the year. All along the while, we're probably going to get a nice buffer from that huge data center segment at AMD, as well as embedded for Xilinx, things like automotive chips, 5G mobile network build out, internet infrastructure, and so on, still going at a rapid pace. Basically, we're seeing, as we expected, a ton of hard asset investment from enterprises as they need to get their actual infrastructure up to date with the times. AMD a top beneficiary of this. So overall, where they did provide some specific guidance was for the first quarter of 2023. At the midpoint of guidance, AMD said revenue should be $5.3 billion. That would be about a 10% decrease from the first quarter of 2022. Adjusted gross margin expected to be about 50%, which compares to 53% a year ago. So basically, we can probably expect some earnings per share and possibly some free cash flow declines as well to kick off the new year. A couple of things to bear in mind here, though. AMD is going to begin lapping its acquisition of Xilinx. Again, that was in February 2022. So we were always supposed to expect some slowdown in growth as we now start entering a period where Xilinx was actually part of the equation 1 year ago as it is today. So some slowdown there, but overall data center and embedded led by Xilinx continuing to grow, expected to continue to grow throughout the year and offsetting some pain in PCs and laptops. On to a couple of quick notes on valuation. Now, I think this is going to get very tricky given the environment we're in. And that's going to just be further complicated by the fact that AMD is still accounting for some things going on with the Xilinx acquisition. But at this juncture, AMD trades for 93 times 2022 earnings per share, or on an adjusted basis, which backs out some of the effects of that Xilinx acquisition, the stock trades for 22 times adjusted 2022 earnings per share. Big disconnect there between the two metrics. I think they will start to converge this year, again, as it starts to lap the Xilinx purchase. On a free cash flow basis, we are seeing some pressure on free cash flow, but AMD did generate some healthy free cash flow this year of just over $3.1 billion. That's a 13% free cash flow margin. I think this metric could remain under pressure the first half of the year, but again, rebound the back half of 2023. But 3.1 billion in free cash flow generated. That means AMD stock, as of this recording, $78 a share, market cap of about $120 billion. AMD trades for about 40 times 2022 free cash flow. Now, these valuation metrics, as I said, they're going to get messy. I think they could look worse before they get better for the next 2 quarters, basically through Q2 of 2023. That's going to be reported, that won't be reported until July. So again, I think as shareholders, we're going to have to deal with some ugly looking valuation metrics for some time before things start to clear up. But overall, valuation is not something that bugs me too much here with AMD after the solid report. Overall, I was very pleased with AMD's fourth quarter 2022 report, and more importantly, very pleased with the outlook for 2023. It's a little disconcerting, I know, to not get some more specific guidance for the full year period coming up, but such is life when dealing with some extreme economic volatility and probably the worst downturn in PC and laptop sales in at least the last two decades since the dot-com bubble. It's brutal out there for companies selling chips into consumer markets. But I think AMD, again, making that Xilinx acquisition at exactly the right time, a big pivot towards enterprise markets, things like data center, AI, automotive, 5G networks, things that actually are enjoying secular growth trends for the long term. AMD is a wonderful company. I think it's an important company, one that I think I'll add more to here within the next couple of months. I like where they're at right now. Like I said in the previous video on Intel, I still think it is way too soon to bet on a rebound for Intel. I don't like the risk to return ratio on Intel stock, but AMD, I think, has a pretty clear path to eventually returning to growth later in 2023 and profit margins rebounding. So I like where the business is at right now. Happy with their long-term progress. Stay tuned for some more videos later on. We'll be talking more about AMD and what they have going on. And earnings season still in full swing. So, of course, more videos covering what happened at the end of 2022 and 2023 guidance. Hit the subscribe button. Appreciate all of your support. We will see you again real soon.